Well, good morning. Welcome to Risk Neutral Trading. This is my virtual trading journal. I'm standing here busy typing something, looking at some code, and didn't realize it was 8 o'clock already here. I'm 2 minutes late. Sorry about that. So this is my virtual stream, and the purpose of this is that it is my virtual trading journal. So I'm talking to myself. I stream it to YouTube and to for transparency and accountability. There is no financial or trade advice. I'm not monetized in any way, so your likes and subs would be great. Thanks a lot. So here we go. Now I'm trying to kind of catch up here. In terms of reporting, there are no surprisingly reports out today, which is kind of weird, but it's to do with the government shutdown. Excuse me. Here we go. This is, I use two news sources. One is investing.com, and I like the calendar. Typically there's something there. You see there's no events for today. This week, however, is another story. This is how it would present. This is free. They are both free, but you can pay for them if you want to. Why would you want to? An interesting thing here I see on investing.com, they're ahead of Financial Juice in the fact that they have re-added the non-farm payroll to the docket for this coming Friday. It was removed from last Friday. When it was scheduled to go out because of this slowdown or this shutdown or whatever it is. Now, whether they're just doing this in anticipation, I don't know, but they removed it from their schedule on Thursday or Wednesday of last week, and Financial Juice did not. There's no real earnings coming out here in the next little while that I'm aware of. Not anything about PepsiCo and, Progressive Buffett stuff. This is Financial Juice. It's similar to investing.com in that there's a docket over here, and then there's more of a squawk box idea going on the right side here. And you'll see that there's nothing particularly, some random comment now and then. We zoom down here to Friday, however, and they have the Michigan numbers are in there, which is, of course, not related to anything to do with the government. But they do not have the non-farm payroll and those things back on the docket, so I'm not sure what to think or make of that, but that's where we are. Excuse me, let's get over here. Now let's do the all-important pre-market. And here we go. Well, here is yesterday's. This is a full session chart, right? So here's yesterday or Friday's RTH session. And here we are starting at 1700 last night, and this is the overnight so far. What do we got? Well, we got higher highs and higher lows. It is a fairly balanced profile, however, and we will be opening higher in range. And I'll go through how I determine that on Bookmap. I think it's easier to see. This is the ES Mini. This is the NQ Mini. Same exact philosophy for plotting both. This is my higher time frame chart, which is referred to as a micro composite. And the way this works is real simple. It's the RTH session only. And these are daily bars, candlesticks, whatever. Wherever they overlap, I draw a volume profile around them. When I do that, it generates automatically the high and low volume nodes within this micro composite volume profile. That's these red and green lines. And the data or those levels are pushed automatically to Bookmap by me. generates a micro composite VPOC, etc. Okay, and by the way, we were putting in new all-time highs the last couple of days last week, so there you go. Nothing, no new all-time high in this ETH session, however, so that's a good thing. And this is the market profile chart, full session. Now, once we open, I'll change all of these to RTH session only. Here's about 150,000 contracts trading. We're 0.30% change so far. We're 108% positive volume on the day, and our ATR is way down here at 2.25. Now we go to book map. Okay, this is the book map, obviously. Oh, now come on, honey. Slow down, baby. There you go. This is the dome or the book or and it's full level 2, all levels. This is the micro composite column where I manually enter these prices. This is the micro composite VPOC. Here's the naked volume point of control from where we closed on Friday. This is the all-time high. And a bunch of other stuff below there. Manually entered, by the way, okay? And from the micro composite chart. Now, these are the high and low volume nodes, which are pushed automatically from IRT to bookmap. And this is the volume profile for the full session. This started plotting at 1700 last night and will continue through 1600 today. It's not the ETH, it's the Globex of the full session. This is the RTH session, which volume profile, which will reset this morning at 8:30. This is a real important column for me. This is my notes column, and the first thing I do every day, and conveniently I don't have to change it today, is I change the column title to the expected open type for this upcoming RTH session. Higher in range is what I'm expecting. And how do I determine that? If we opened right here, right now, how would that open compare to the previous close and the previous range? It would be higher than the close and within range, higher in range. Pretty simple, huh? Next thing I do is clear the columns, or clear that column. And then we'll re-enter the statistics associated with these price levels based on the opening type, and then through the day, plot the migrating VPOC. This is the IRT column for the session prices, as just what you would expect they are. There's no indicator of my book map or my IRT charting. And everything that I do here is very straightforward, not magical, mysterious, or anything. It's just the way trading should be approached, in my opinion, which is a random environment based, and you approach it with probabilities and statistics. So there's a few levels here that let me explain. First of all, we have the IB high and low, which are these green dashed lines, because I'm just going down the list. The IB high and low can sometimes confuse people because they don't understand the naming. It stands for initial balance, which is an old market profile term. What the high and the low really represent is the high or low of the first 1 hour of the RTH trading session, and that's all. Next, we have the POC for both the full session and the RTH session. The POC, also not complicated, simply marks the price at which the most contracts have traded so far in the session. Right here, right now, at 67.84, we've traded 4,779 contracts in the overnight. The very second that this number down here is 4,811, Notice it just changed. Then the price is then the POC is going to move there. That's all there is to it. There's a VWAP for both the Globex and the full session. I mean the Globex and the RTH session. And there's a mid price for the RTH. That's it. There's nothing complicated or mysterious. This blue line over here is simply a vertical line that I put on the chart at the beginning of each session. It's a visual cue for me, that's all, so that I can be sure I have the entire session in view on the chart. That's all there is to it. Let's look at the statistics here now. They come from this chart and this study. Conveniently, IRT highlights the correct open type, and even more convenient, today will be the same as Friday, so it's blue still. The study's extremely straightforward. It looks back at 2,000 trading days. Of these 2,000 trading days, price revisited the overnight volume point of control 505 times, or 83.3%. Overnight volume point of control, 83.3. There you go. That's all there is to it. And then I will simply just go down the list. Overnight volume point of control, previous higher low. Overnight mid is 78.7 or 76.7. My eyes are terrible. Sorry about that. 76.7 overnight. Overnight volume. I'm guessing right there. Yes. Okay. 76.7. How did I know that was there? Because, well, first of all, I can look over here where this will plot multiple level descriptions or titles, but I know the color and I know where it has to be. The overnight high is 75.4, and that's right there. Excuse me. Previous value area high, 71.3. Previous close is 70.5. Now, these are not hard, fast lines in the sand, guaranteed targets. They are in order of their their statistical probability. That's the flags looking back over a data set of 2,000 days. So they should give some indication of what may or may not occur. Okay, 68.6 is the IB high. Well, unfortunately, it's right underneath of the value area high. So what I'm going to do here is this. What is it? 68.5. 0.6. Call me a liar. And go IB high. Why do I put the initials? Think about the definition. The minute we open, this flag and this flag are going to move to the high and low of the current, today's session. And they're going to start right at the high and the low, and then they're going to continue to move up or down with price. Stand by. Again, this is not anything mysterious or complicated. I'd love to try to be able to BS you into thinking that, and that you got to wear a pointy hat and have a magic wand, and for which you pay me a lot of money. But that's not the truth. That's not. I think there's plenty of internet gurus out there that have taken that role, and I'm not it. The IB low is 61.9. Okay. Jesus, I am sneezing and whatever else here. Up one side and down the other. Stand by. Wow. Okay. Where am I at now? Who's on third? $56.8 is the previous high. That's what I was looking for. And previous low. Now, this should be overnight low. 49.7. Okay, I'm going to call that square. For now, that's got to be good enough. Where am I next? Okay. Well, we're ahead of schedule here. I must be forgetting something. I don't know what. Anyway, I'm trying to keep up. Since that chapter marker thing's done, I'm trying to keep my chapter markers on a text deal with elapsed time against the OBS. A real pain in the ass, by the way. All right, the next thing I'm going to do here is a thing called the TLab snap. And what that is a deal, something that I do every day. I do 2 posts in the TLab, one about 6 in the morning for the numbers, and then one at about 8:20 with all the levels and stuff that that I would expect is going to happen for the day. And what is the TLab? This is the snap I do. Just to give the folks over there who don't have the same kind of charting, an overview of the recent sessions, all the numbers you could think of, and where we are currently, just to help out a little bit if possible. The TLab is a bookmap Discord chat room started by a guy named Tom B., who I believe is the real deal. He doesn't trade live or call trades, and I'm sure you're never going to see a snap of his account. You will also never probably see, a wrapped Lamborghini or gold chains. So, but I believe that he is, in fact, a real deal. He's been trading for 46 years, and I have no reason to doubt that. There's a good crew of people in there, and probably one of the reasons that I have a fond spot for it is you're never solicited for anything. There's never anything for sale. So much like here. And it's a bookmap Discord chat room called the Traders Lab. And I don't recommend any of the other bookmap sites or Discord places. The only other 2 that I've ever visited were guy was selling something third word out of his mouth. So there you go. Now we're going to zoom on to the boy, this is a pain. If you want to be able to trade, it's probably pretty sorry for the jerkiness here. Typically this chapter thing, never mind. You don't care. What we're going to do now in order to trade with bookmap is the first thing you have to do is activate the trade control panel by clicking the padlock up here. And then you select a way that you will interact with the application to trade with your mouse. If you choose chart, the only place you can trade with your mouse is the trade control panel, or the active data column. If you choose dome, the only place you can trade with your mouse is the dome columns. And both is, you got it, both columns. I particularly use, where did it go? Multi-brackets. Okay. This is where the risk neutral methodology is applied. This is the smallest risk neutral trade package you can have, because you need to have a package of even number contracts. So you've established the size. Then you establish the stop loss in this tool that's in ticks. You establish the stop loss for the entire package. In my case, I have established 12 ticks. Now the first thing you should use is your account risk parameters to establish this volatility, what instrument you're trading, etc. Once you have worked out everything and you've got the first package size and the stop loss understood and figured out, your first risk neutral scale or profit target is fixed because it's for the same amount of ticks positively as your stop is a loss, and it's for half of the contract of the package size. It's for one contract, not two. Then you have a runner. That simple. 4 lots. 4 lots, a lot of volatility. There you are. Now, the key to this is the minute you achieve this scale, the trade is risk neutral. The worst you can possibly do is scratch. I also put this thing on, which didn't work properly last time, and I'm real upset about that. Okay, so there we have that. And now we're going to get ready to rumble in about 5 more minutes, but let's continue on. We've selected, now I don't need any more of the bracket orders or tools in the trade control panel because I use multi-brackets. You'll notice that there's the metrics to do with trading in your trade for the day. Same up here. So what I do is I re-click this button. Stays green, padlock stays open. I'm able to trade, but I get my real estate back on the screen down here on the chart side, and I have the same metrics available up here. Plus I have cancel all and close all. There you go. Now we're ready to trade. Going to be opening here in about 4.5 minutes. Or, what do I expect is going to happen here? Well, our overnight inventory is 100% long. Here's our open, and we've been straight up ever since. Balanced profile, but the inventory is long. So I would expect some responsive selling at the open to take profit. Also, then, I would imagine that we are going to enter into a situation of kind of a balanced rotational day. That's my That's my prognosis here. And I guess everything is streaming along great. We're going to open in about 2 minutes. That seems like it's okay. I've got pretty much this done all right, I guess. Yeah, it's kind of a pain in the ass, but thanks for bearing with me. They updated OBS, and I made the mistake of clicking OK, go ahead and update, and it broke a couple of the plugins, one in particular that I relied on heavily. And that guy who made it isn't, it's not his priority to fix first. He had several others, which I suppose he got paid for, that he is taking care of, and that's perfectly his business. So we don't have any reports out this morning or today. There's no crazy speakers. Of course, we have the potential political risk that we do every day, where there could be some speaker or some tweet or something that has an impact on the market, and that's nothing we can do about that. We can't manage a risk that we don't know about. You know, if we know non-farm payroll's coming at 7:30 on the first Friday of every month, we can manage that risk and plan for it. We don't know if someone is going to tweet something or say something in the middle of the day. So in this environment, my advice and my plan is to limit my risk and limit my exposure to risk to A+ setups, and that's all I know to do. That's my advice. It's my story, and I am sticking to it, baby. Seems like everything's going. We're trickling along. I love it when it trickles. We're going to open in 3 seconds. Let's see if that happens right now. There we go. Well, it's a second early, but I'll take that. I have Rhythmic set up to reset my computer clock to the Rhythmic system clock, or resync, every 2 minutes. That worked slick. I'm really happy about that. That's been a giant problem. Now remember, we'll start redoing our volume points of control, and why that. Now, according to Bookmap, that was the open right there. You see how that just calculated? Okay, and we got to move there we are, because just before the open, our volume point of control shifted up a bit. You remember? We don't change these. I don't change these levels after the day is underway, but up until the open, this is a live and fluid market. And here's the first migrating VPOC. This is a holdover kind of from my older workflow, where I would keep the time scale at 5 minutes. So obviously throughout the day, after a while, pretty soon the yellow line here would scroll off the left and I wouldn't see where it had been. My plan, my workflow now is to use the blue boy over here, and I'll put a new one on at our current open, and make sure that I have the entire session in view until I anticipate interacting with the market to trade, and then I can scroll in. This way I always have the correct perception of context, and that in my opinion, that's the most important thing you can do. And there's the blue boy. If I told you how I did that now, I'd have to charge $1 million. It's real tough. You go vertical line. I find that it helps, Right now, you don't know where the POC's been. You don't know what the overnight profile is. You don't know how the session traded. Now you do. The session traded up, higher highs and higher lows. The POC migrated higher. You see, I think it's really like one of those football moments. I don't know why I didn't think of that a long time ago, frankly. And I think I need to attribute the congratulations to Rod, who mentioned in a tweet in a post in the Static, which is a private thing he's created, and I can't show it or invite anyone or suggest it because it's a private deal for him. That he is trying to keep the entire session in view, and I think that made real sense. It resonated with me immediately. Now the next thing I'm going to do is I'm going to change this session to RTH only. Like that. Now, here's Friday's RTH. Here's our open. And here we go today, right? It kind of gives you a little more dramatic understanding of how the trade is. We'll do the same for market profile here. There we go. And then save all. Now I also plot the exact same configuration for the micros. This is the MES, MNQ. This is just the ES, stays the same, and this is the micro composite. That's kind of cute. Because I share my session prices with a lot of people, free, no problem. And so if that would help you, let me know something in the chat, subscribe, like, whatever, and then drop something in the chat and I'll hook you up with those. No problem. A lot of people use them. It pushes live automatically 24/7 and, from Sunday evening at 1700 through 1600 on Friday. It's a CSV file that's updated on Google Drive, and you just link to that CSV file and put the link in your Cloud Notes or your program of choice, or this line indicator over here, which uses the same data. And there you go. And what are we doing now? A little responsive selling to take a little profit, eh? Who was it said that? Who was that masked man? And don't ever think you're going to predict the market, or that I am ever trying to. I do what I think, what seems logical to me. They opened lower and they traded higher all night for the entire ETH session. Well, if you were up here, what would you do? Wouldn't you take some profit? Probably. That's how I look at it. It's about that. That's about as complicated as it gets. So here we go. Ho ho. I probably forgot something, but I'm not sure what the hell it could be. So now it will just be a matter of monitoring the price action and getting ready for anticipating the trades that I'm betting, which are the IB trades. I've got the reason that I switched the charting to RTH session only is to keep the value area high and low wherever it went. There maybe. No. To keep them aligned and in the proper relationship with the developing value area high and low. Now, developing is applicable to the current auction. The value area high and low are for the previous auction. The people that use these, including myself to much of a degree, use these levels expect the value area high to reflect the previous RTH high and low. If I leave IRT on full session, then by definition, the value area high will be reflecting the previous auction, which would be the ETH, not Friday's RTH. So that's why I do that. I don't think anybody probably cares, but now you know whether you like it or not. What are we doing for volume here at the open? Ooh, bonk. 2.25 ATR, average 2 range on a 5-minute. 77.1% volume at this moment in time. And this is open interest. SPX. And this is where we are. Now, one of the reasons that what is the matter with you? One of the reasons that I plot and track the micros, even though it's just, most of the time just burning up CPU space. In order to trade the risk neutral philosophy, you've got to trade an even number of contracts. So 2 is the smallest package you can have. Well, if 2 minis, which means a stop loss at 3 points or 12 ticks for 2 contracts is $300. If that is more than the risk tolerance your account has, or my account, or anybody's account has, then the only thing you can do is size down. And the only way you can size down from the minimum size on minis is to go to the micros. So there you go. Something's not right here. Bitch. A little responsive selling, not a lot. Here we have our IB low. What is that? That's the low of the first 1 hour and the high of the first 1 hour of this RTH trading session. Boom. That's all there is to it. This is real simple, sports fans. It's not simple or easy, but it's not magical, mysterious. Do yourself a favor and eliminate the concept that there's a bunch of mysteriousness going on. And that seems to be that's the stock and trade of the average internet guru, is to try to make it seem like they're the only one that's got the secret sauce. And that's just absolute BS. So there you go. It's a Monday. It's 24C, which is about 70. Well, one of my computers says 84, and the other one says 73. I'm gonna go with I don't know which. F. I don't know what. I don't have to think about it. Well, I don't know. 76 sounds about right for 24, because we typically keep our house about 24, 25, 23. That's about right. So it's 76F for all you Fers out there, and 24 for the C folks. And here we are. Kind of a muted auction. Light volume. We're at 0.21% positive change since last night. Volume's picking up. We were at 74, I think, when I last looked. We're at 73.2 now. So we're gaining a little headway, and the AT average true range is coming back a little bit and coming up. Don't ask me what any of that has to do with this, but there you go. There's no numbers or reports coming up. So there's that. Now there is a pretty I can't overemphasize the potential of the critical political risk. And that should not be a secret to anybody that's followed the markets at all lately, starting back in April with the tariff, rollout. And it's nothing we can do, in any kind of a project management or any kind of management, actually. The first thing you try to do is recognize potential risks to your project and develop a risk mitigation plan to try to mitigate your risk so that you continue with your project. If you don't know a risk or one cannot be identified because it could just drop out of the sky, that's critical. This has got nothing to do with political anything. This is a fact. We don't know. It could be the same with anything. A war breaks out, or a bombing happens, or 911 happens, or whatever. Anything that you don't know about can have a huge impact on the market, and that's the risk that's like the 500-pound gorilla in the room. In my opinion. And I am especially weary of the risk story because with the government shutdown and all this jockeying that's going on politically, and all the we're gonna wage war in the cities and all that kind of stuff. I think there's almost an overwhelming desire on the part of the president, whoever else is, to make tweets and stuff because they're trying to get their point across and they're trying to keep their base in line and all these things. So I think that we have an ever-present potential risk, probably heightened in this current period because of the government shutdown, and we're going to fire everybody and we're going to do this and we're going to do that. I don't know. I have no clue. And that's the bad part, is the I don't know part. Quit singing until you quit. Somebody outside doing stuff. Somebody outside doing stuff. All right, so I hope this is, oh, you know what I didn't do? I hope everything's working all right here. I restart all of my update and restart all of the equipment here every weekend. I forgot to recenter to the mixer to Unity. Drop a like, subscribe would be great. Most importantly, leave a comment, put something in the chat. Let me know where you're from. It's always great to know that. I lived out of the country most of my life, so I've got friends and fond memories in sub-Saharan Africa for most of the 90s, and then the Caribbean, Colombia, and most recent 11 years in Southeast Asia. We lived in Kuala Lumpur, Malaysia. So always looking to say hi. Selamat pagi, or selamat datang, I guess, actually, over there now because of the time zone difference. Yeah, drop something in the chat as to where you are, and if you agree or you don't agree. The stream is high def, 1440p. So if it's a little blurry on your end, click the gear thing, and you can get a high def stream. And all of it, remember that this is my virtual trading journal. So the point of this is not, I'm not monetized in any way. Sure, if YouTube wants to give me, $10,000 a day, I'd be happy to take that from them, but I don't guess that's going to happen, and that's not the point. The point is, this is my virtual trading journal. When I talk, I'm basically talking to myself. And the reason for that is I record everything on my screens, obviously, visually. But the only way I can get any insight as to what I was thinking is to narrate. And that puts my thinking by way of audio in the stream. I stream to YouTube to further ensure transparency and accountability. And also, and very importantly, I can review the stream on any device, which is pretty handy. I have stand-up desks only, and I'm standing here from 6 in the morning till around 9 or 10, 2100 or so, 2200 each day. And so it's, that's enough, I can review it on my phone doing something else or whatever. That's that. Again, there is I'm not sure if I got around to this or not, but this account is a TopStep evaluation account. And it trades live with that multi-account trading thing to 4 others. So at 5 accounts instantly. On Friday, I had a problem with the account copy thing here in Bookmap. I entered the trade, no problem, all 5 accounts. I watched for some time and it didn't go, price action wasn't doing what I wanted it to do or what I expected it to do. So I brought my stop to break even, which was subsequently hit. Unfortunately, 2 of the 5 contracts the stop didn't change. And thought I was all flat and standing here, fat, dumb, and happy. And all of a sudden the price got to the previous stop and 2 stops fired. So that was pretty disappointing. I'm going to try to monitor that now. Have to figure out a way to do that. This is the way I would monitor it. By looking at working positions, and then you can close or flatten or whatever you think is supposed to happen over here. It's worked flawlessly for a long time. Yesterday or Friday was the first hiccup. Now the 5 counts, the 5 accounts were completely synced in terms of profitabilities, and they were all within one more profitable trade of being in the XFA, getting out of the evaluation stage. Now they're all out of sync, so that's disappointing. And Bookmap has not answered me back as to what I should think or do about that. This is the most current Bookmap version here, 7.6.0, build 28. And this is IRT, by Linsoft. Yeah, well, so here we are. I don't know whether, yeah, I don't guess it matters. So here we go. Off to the rodeo. No news on the horizon today. Again. Back to the conversation about the multi-accounts. The idea then is that this is a completely transparent and fully accountable record from zero to hero. So, you know, and I don't ever, I mean, I am fortunate in that I don't have a lot of issues that some folks do, or I've gotten over them or whatever, learned to control them. I don't ever blow up accounts or need to reset or things like that. Overtrade stuff, you know. Probably I undertrade more than anything else. That's probably one of the bigger problems. Analysis paralysis by analysis. I should say. Okay. Here we go. All dressed up, no place to go. One of the things you'll discover about trading, if you trade as a business, not as a video game or gambling, is that you spend a lot of your time watching. It is not a adrenaline sport if you're doing it as a business. We're pushing the IB lower and we're not touching that IB high at all. And I'll be the first to say, I guess I got my open off here because here is where we set that IB high right at the open, I guess. IB high, open, yeah, there we are. Interestingly enough, notice that where the open is, well, actually, it's got a lot of stuff up here, right? Previous value area high, the open is up here, the previous IB high, the current IB high. This is our full session volume profile, and here is our current session volume profile. Pretty much a balanced rotational day with a downward skew. Now, if you look at this, looks like a balanced rotational day, doesn't it? Here's what we're doing. There's the context. What is the context? It's lower highs and lower lows out of the gate. What else is happening here that I need to think about or something or do or whatever? I don't know. I don't know. All right, we're past the first 30 minutes here pretty quick. And what does that mean? Well, if you're a market profile guy, it means that A brackets just rolled over. Or person, I should say, not guy. Also, it is a requirement kind of. I show you how anal I am. I want to remove that line, and I want to put it exactly where it belongs, right there. There you go. So the trades that I am vetting and that I am stocking are the initial balance trades, of which there are 2. But let's loop back to the definition. Ooh, here we had another VPOC migration lower. That's a setup that some people follow. Not me yet, because I just got through saying I'm working on the IB trades. So that's what I'm working on. The point of the conversation is the definition of the initial balance low and high are, and I went over that in the pre-market. But, just to recap it again, they are simply the high and the low of the first 1 hour of trade in the RTH session. That's all it is. That is a very widely known, understood statistic that is associated with that level, with those levels, I should say, coming from the market profile days again. Here we go with 49.7%, the overnight low, and we're heading down to the close, it looks like. This is interesting, isn't it? Now, here's the close, and the probability is 70%, and there's the overnight low at 49. This is a classic example. Oh, what happened there? That these are not hard, fast lines in the sand. These are probabilities, okay? All right, but back to the IB statistic now. So the IB statistic says essentially that there is a greater than 97.7% probability in all 4 open types, in any of the 4 open types, that price will exceed the IB high or low at some point in the balance of the RTH trading session. That's about as high a probability as you can get. Doesn't mean it's 100%, but, anyway. Now, first of all, that statistic doesn't exist, is not active until the first 1 hour, because these are going to continue to move down, continue to move up until then. At that point, the statistic is active, and then we wait for the statistic to be satisfied. After the statistic has been set in place and satisfied, we have two possible trade setups that are recognized by many, and which I am working on vetting. And that is the IB continuation trade, which is just what you would imagine it is. We've been trading down. We have the IB set. We take out the IB and we just keep ripping in the same direction, or same way with a high. Continue. The other one is IB failure, which means we come down, take the statistic, no action to keep, no interest to trade lower or more in that same direction, and we mean revert. We go from the outside back in. In this case, to the mean wouldn't be very far because that's the mean, right? Those are the two trades, IBF and IBC. IB failure, IB continuation. Only valid after 9:30 and after the statistic has been taken. And the statistic might not be taken out by price until 1 millisecond before 1600. That's that is the definition of the statistic. At some point in the balance of the RTH trading session, the high or the IB high or the IB low will be exceeded by price. It could be 1 millisecond after 9:30 and 1 millisecond before 1600. So you have to be patient. There you go. And what does it mean to vet trade? Well, you identify a setup and the criteria which qualifies that to be an entry or a trade. You then backtest or in some way capture a statistically significant data set of that setup and those criteria and determine mathematically if it has an expectancy, a probability, an edge, whatever you want to call it. And if it does, then you take every one of those that presents themselves in the live market. So that's what you do. That's my story, and I'm sticking to it. Notice we're getting pretty close to that micro composite volume point of control from Friday, and settlement and close and all that stuff. All of those levels now. If in fact you're trading some other system and your one of your vetted trades is the VPOC migration, Been sweet, huh? Without any heat. And that's unusual. Typically, that's my worst or my least profitable setup that I have had vetted, but not really strictly as I am now with the IBs. And something that's important to recognize is when you are working on vetting a setup, you don't take any others. I don't. And all of the criteria about that setup has to be exactly the same. Otherwise, it's not statistically significant and doesn't fit in the data set or the subset. You have to have the same stop, the same T1, the same T2, and not monkey around with them. That is why the most expeditious and, in my opinion, best way to vet a trade is by programmatically backtesting it with your machine. First of all, it eliminates any discretion, which humans are really good at, and it can be done so quickly. I mean, I can backtest 500 days, 500 trading days. It takes 3 seconds with my backtest engine in the IRT. Now I'm just getting the coding up because I'm not, Mr. Wizard over here, but this is the backtest rules for the IBs. An IB short, an IB continuation, an IB short failure from the high, an IB long failure from the bottom, and an IB long continuation from the top. These are the rules. And when you're doing the rules programmatically, at least in IRT, it's not like the multi-bracket. You have to stipulate and specify exactly for both long and short. That's why there's all these rules. Now, what I've done over here, because I'm an old cowboy and I'm a little bit more visually acute, I guess, I've created custom indicators for each of the rules in the trading system here. This chart has nothing to do with the trading system, except for the fact that these rules are exactly the rules required and are the signal markers are the same. So here's the IB high, which is not set yet. This is from Friday, excuse me. Here we have today. On Friday, this was the IB high. This was the IB low. This was the continuation zone. This is the pullback zone. Same thing for the low. This little dotted boys here represent 1 point above or below the IB, which is a trigger zone. So I can see when the signals fire, and I can see if it's happening where I expect it to. And we get another migration lower over here. Hope somebody's doing those. That's real. I'm sure, I haven't looked at Static or the Traders Lab or anywhere, but I'm sure somebody's happier than a pig in the mud. Now, here's what would happen. Here's what is typically happened with me. Here we got IP migration, no heat. Down we go. IB migration, no heat. Down we go. IB migration, oh. Stop out. That's the rub with that trade in me. Obviously, where this, the yellow brick road, how can you miss that yellow line moving? But the follow-up criteria is the tough one. for me. Or not tough, but it's what needs to be vetted properly. And you see what happens here now. Okay. There we go. All right, 15 past. Our IB is going to be a thing here pretty quick. I've got a nagging memory of that issue with the not having all of the accounts copied correctly. I'm not sure what to do about that. Whether to switch over to a micro. It's not got any, price or value. Really, 1/10 of the value of the mini, and see if it works properly. The thing about it is it's worked properly for a long time. I don't know what to think. Maybe send Bookmap another email and ask them what the hell over, you know. I don't know. Don't know. The other side of the coin, of course, is to just don't use it. But then that's a waste of time. I want to get these 5 accounts at least into the XFA. Then it's up to me if I want to continue on with them or not. That's fine. The idea was that obviously once you go to a live account, you do not, the copy story and the multiple accounts is gone. That all goes away as expected. But you can, with 5 accounts in XFA, you can build up you can take withdrawals or payouts on all 5, and you can build up your balance to convert to the live account. So, or at least that was my thinking. And perhaps it's one of those best laid plans of mice and men deals, you know. So we do not have a statistic yet, or a trigger, you know, a stat to trade to. Let's give a run around the roses here and have kind of do our checklist. Well, there's the micro composite market profile. There was there was the responsive selling. Not quite to the close yet, but pretty much eliminated that inventory so far. Volume started out in the 70s. We're building now to a normal rate. The ATR has jumped up from about 2.5 to 5.5. That's the average 2 range for over on a 5-minute candle. And where'd my mouse go? Here we are. This is my backtest setup. Obviously, there's no, the levels are not plotting because we haven't, it is not 9:30. There is no statistic yet. Remember that your mission as a trader, your prime directive as a trader is to protect and compound your account. And the way you can do that is to manage risk. And in this environment, the only way that I know to manage risk is to limit as much as you can your exposing your account to market risk. In other words, take A+ setups that you vetted. Certainly, you know, certainly don't think you're going to get anywhere being a gunslinger. I don't believe. And remember, this is just my virtual trading journal, and I'm talking to myself to provide my thinking to the recording. I also believe that your subconscious mind believes what you tell it, specifically what you articulate out loud. And so most of what I say here is always positive or that's my goal, and constructive. In other words, if you continually tell yourself, oh, I just can't stop overtrading. Oh, how am I going to stop overtrading? Well, then your subconscious mind goes, oh, okay, this guy likes to overtrade. Boom, 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 overtrade. And that's how I believe. That's what I believe. So there you go. You do what you want. Obviously. Welcome to the stream. I see there's several people, viewers in and out and up and down and all around, and throw something in the chat. Click a thumbs up. That'd be super. Doesn't cost you anything. Subscribe. Doesn't cost anything. Helps the stream. Gets pushes the algorithm. I don't know what about algorithm, schmalgorithm. But anyway, it apparently offers it to other people, and there may be somebody out there that this could help. And that would be, I would like that. That would make me feel good. I share this stream publicly on YouTube. It's basically you're looking over my shoulder 7 hours a day for the entire market trading. Hey, Richard. What's up, dude? Good morning. Happy Monday. Happy government shutdown over here. You notice that the non-farming stuff was all canceled last week. It's back on the investing.com schedule for this Friday, but Financial Juice seems to be behind. I have no clue what that means, whether one knows more than the other, or I don't know. I know it's just 10 kinds of stupid going on. We got stupid running amok over here. One real interesting statistic, though, for anybody within earshot, the statistics for government shutdowns over the past 8 or 9 of them, the market has, the S&P, the stock market, has gone up and to the right each and every time. So bear that in mind. Now, if there ever comes a time when we actually default on our bonds, then, it won't matter. We'll all be going back to trying to grow our own food, I guess. But in this situation as we have it, the statistics are that over the last 8 or 9 government shutdowns, the last one of which was the longest, I believe, 30-something days, the market has gone up. Well, we're fast approaching the 9:30 hour. At which time the IB high will no longer move up, nor will the IB low move lower. The statistic will be at that point active in another 2 minutes or a minute and a half or something like that. No, 2 minutes, I'm sorry. That does not mean that the statistic is active yet, or that it has the trades are in play. It means that the initial IB statistic is in play, is live at that point. Hmm. 30 seconds, pretty quick. Notice that I share my monitors here on the stream, not just the application, so you can see any program open. Also the hours, minutes, and seconds, and the date, which ties up to both Bookmap and IRT, furthering the accountability and the transparency. I mean, stop and think about it. It's my stream. Who am I bullshitting? Me? You know, that, what sense does that make? It's like mirror, mirror on the wall, right? All right, 9:30 has happened. We are now, the IB statistic is now active. The IB low will no longer go down, nor will the high go up. And we are, where are we? Exactly in the middle, on the mid. Okay? So this does not mean, and may I say this this is the voice of experience speaking. Do not trade to the statistic. Wait for the statistic to be accomplished, and then your potential trade is on the books. What do I mean by that? Oh boy, we're ahead of, we're under, let's pretend we're looking lower. We're under the POC, we're under the mid, we're under the VWAPs. I know it's going to be the IB low. No, you don't know that. And more often than not, it'll go one way or the other. And this situation right here could go on all day. Remember, it is not a 100% probability. It is a 97 point something. Let's see what it is. 97.7 if memory serves. Yeah, well, in this open type, it is a 97.9% probability that the IB high or low will be exceeded. 97.9, 98.3, 97.9, 97.9. There you are. Out of 2,000 trading days, price revisited or exceeded the overnight high or low, the initial balance high or low, 97.9% or 593 days out of 2,000. Where we opened higher in range. So out of 593 days out of 606. Remember that this is the number of days where we opened higher in range. Looking back of a large data set, sample set of 2,000 days. So there you go. Meaning then that 2.1% of those days, we did not take either one, IB high or IB low. And interestingly enough, we did that 2 Fridays ago. 2 Fridays ago, we closed without taking either one. There's about that, I think the probability, if I did the math, is like 40 days out of 2,000 that's been the case. So it is a possibility. Not a very high one, but you know. So having said that, then I repeat, do not trade to the statistic. Wait for the statistic to be achieved and then let that be the initial setup trigger for your set, you know, whatever you're vetting, however you're going about it. Let's take a spin here. First, this is my backtesting and visual confirmation chart. And you see now that we have just entered and started plotting our levels for the IB, for the initial balance trades. Okay. What else we got going on over here? What's the volume like? Well, 94%. We're back up, or almost up to normal volume, and our ATRs jumped way up to 6. 6 points per 5-minute trade. Average true range. Boom. The responsive selling worked out pretty much as expected from the pre-market. And let's see what's going on over here. Well, there's nothing today in the calendar, so we know that already. Tomorrow there is. But financial juice is where I'm curious. This is today, obviously. So Johnson has been talking. That's about it. Well, I guess we got 2 donkeys over there. Nobody's got anything to discuss. So that's okay. Let's not think about that anymore then. That heightens, as I said earlier in the pre-market, that really heightens the probability of some unexpected critical risk, political risk. You know, Trump, somebody's going to say something that's going to have some big impact, I guess. That's what I expect. So keep your powder dry. If you have a setup that you've vetted and that is viable, take it. And keep your risk, or, you know, keep your risk exposure to the market at a minimum. They're definitely fond of building out that POC, aren't they? We got them all stacked up now. View. the VWAPs, the mid, the VPOCs, everybody dance. We've taken out Statistic, Statistic. Again, these are just probabilities. And if you're in a trade and it's part of your trade plan, you can use those for your runner targets, suggestions for your runner targets. I cannot do that at this point because I'm vetting the trade, and I cannot change anything, So the principle that I'm going on here is that I am approaching my goal, my target, whatever you want to say. Motivation is to approach and develop trading as a statistical, consistently profitable, reliable business. Look at this. What happened? What happened there? Somebody said something. You can bet on that one. That's not, suddenly they just took out 159 stops right there for whatever reason. And look at that volume. Now a lot of sell volume, and they're not getting any direction. That's to be noticed. So approaching trading as a statistical business or as a consistently profitable business is completely different than approaching it as a video game or gambling or, an adrenaline rush or whatever else. So the first thing you have to recognize is that the market is a random environment. Stop and think about the millions of traders involved in this RTH session right now. And the market is moving based on the majority of those millions of traders' actions. Think about that. You can't get 10 people in a room to agree about something, and this has got millions of them. Anyway, so it's a random environment, and I firmly believe that. Also, it's a statistical fact that the probability of the next trade is 50-50. It's a binary event. Can go up, can go down. That's it. Yeah, that's a good one. I watch Patrick Boyle a lot. I like to listen to him as I fall asleep with my phone. First, I enjoy his humor. I think he's incredibly intelligent and really knows a lot about finance, Richard. And I've watched that one myself, actually. And yeah, we're headed for another 2008. The way they're heading, it looks to me like he's got a lot of good stuff to say. Pertinent, that's another thing, and unbiased. I think just the facts. I definitely appreciate him as well. I'm talking about Patrick Boyle on finance. It's a YouTube channel, by the way. Anybody else that's listening with Richard here. See if I can put something in the chat here, which I always forget to do. There you go. Just to test it out. Anyway, so the outcome of the next trade is 50-50. It is a coin flip. So there's a couple things you need to do when you're approaching trading to vet a specific setup. First, you have to capture a statistically significant data set outside the probability of random distribution. What does any of that mean? Well, flip a coin. We all agree a coin is 50-50. Flip it 5 or 10 times. No one is surprised if you get more heads than tails or vice versa. That's a random distribution. Flip that coin 1,000 times or 10,000 times, you're going to be pretty much spot on 50-50. Same way with trading. And the markets, I should say. So what I believe the way I approach this to vet a trade is identify a setup or setups and the specific criteria that validate an entry for that setup. In my case now, I am working on vetting the IB trades, of which there are 2. I chose the IB because one of the IB trades, the IB failure, is essentially mean reversion, outside in. The other one, IB continuation, is applicable in a directional market, so you can trade both sides of the market. And a fun fact, the market is in a rotational or balanced state a majority of the days, and a minority is directional or trend. That's something to think about. Okay, so what am I going to do? Well, the first thing I do is wait for this. The first piece of the criteria of the setup is the IB statistic. Well, there's no trade available to me at this point because there's no IB statistic made yet. There has to be the IB low or the IB high must be exceeded to accomplish that setup, that statistic. At that point, I then move to the next step in the rules for whether I believe it will be the IB continuation or whether the data shows me it'll be the IB continuation or the IB failure. In the case of vetting the trade, I simply will put on the trade with the risk neutral trade package that I talked about in the pre-market. It's a 2-lot. There's a 12-tick stop, a 12-tick T1, and a 48-tick T2. I can't change those. If I do, then that particular trade cannot be included in the data set used to vet the trade, because how can you say, okay, out of 100 trades, I got T1 50 times if T1 is not consistent? It has to be exactly 12 ticks. If it's 5 ticks this time and 20 ticks the next time, it can't be part of the data set. Same way with the take profits. I hope that's clear. So that's really important, and that's where I'm at now. I will also say that if you try to do that strictly in the live market by watching, plan on living 400 or 500 years before you got enough data figured out of that exact setup, because you may not always have the exact setup. That's another thing about the initial balance reason I chose that first. It happens every day. Mean reversion might not happen every day. IB continuation or the VPOC migration may not happen consistently every day with the same rules, but the IB, there's no question about the IB statistic and that it happens every day, or 97.9% of the time it happens. The way I'm trying to approach this, and I'm, remember, I'm an old cowboy here, so I'm not a Bill Gates Jr. this is the way that I see to do this efficiently and in my lifespan is to identify the specific set of rules around the IB high, continuation or failure from both the IB high and the IB low, and then backtest because, and I can show you here, set up this backtest for 500 days. Okay, this is the IB statistic for 500 days. Both IB long, continuation failure, IB short, continuation failure. You ready? Okay, sorry about that. Boom. Took 5 seconds to go through every 1 minute bar 493 days ago. There's the profit. It took 372 trades. 183 of them were long, 189 of them were short, on and on and on. And that's how it works. Here is, I know exactly this problem right here. This should only be $750 maximum trade, winning trade, because that's 48 ticks plus 12 ticks. That's 60 ticks times, 1250, do the math. This is the 1st of May, 2024, and I have no idea. I mean, I am working out and will figure out why that is occurring. Instead of taking the T2 profit, it's going to the end of day. And I can't figure out the difference. The maximum stop size, which is really important, is correct. Then, if you're a lucky camper, you can go down here like this. There is each and every trade going back to November 6, 2023. And you can see exactly what happened. Here's a long T1, T2. Here's a long T1, T2. Here's a long T1 end of day exit. Scratch, scratch, long, whatever it is. Here's a scratch, right? And you can do that for both. Now, that took 3 seconds to run that back test. And you can analyze it till the cows come home. But that way you can get statistics in your lifetime. And that's what I'm doing. I'm also visually confirming the rules as the day plays out here, because I figure that doesn't hurt. This is the IB high. This is the IB low. The rules, which are described here, rely on this continuation zone or the pullback zone. Pullback zone, continuation zone, and then the trigger zone, which is 1 point either side of the IB, low or high. So I can watch for price to do that. And when one of those rules activates, my signal marker will fire an A or a B or an arrow in the direction of the trigger. And I can visually confirm what's going on. I'm just trying to get this as logically worked out as I can for a vetted trade, a vetted setup. That's how I'm going about it. So there you go, boys and girls. And if anybody's using Bookmap or anything else and wants, I'm happy to share the chart definitions and these rules for the backtest trading system and all that. I got no problem with that. And if you're using, say, I don't know, I suppose pretty much any of the packages, TradingView or any of those. I mean, these levels are just custom indicators that I built quickly to go on this chart. These levels and these signals are not in any way connected to the trading system itself. apart from the fact that the levels and the rules reflect exactly what the trading system would do. So this level is a level that this zone are two levels which are identified in the trading system. The trigger is the same idea, right? But you could set these things up on I think on any charting platform that you can create your own indicator for on whatever you say. I'm going to take this to the next step. I was thinking this morning early about this. I'm going to export these levels as I do, you know, the price levels and this and the high and low volume nodes and all that. I'm going to do the same exact thing to Bookmap, and then these prices, these levels, these zones and triggers will all be plotted on Bookmap. Now that might be a little bit busy. What I may do is replace and see what I think about replacing the price levels, price lines here. These price lines are an indicator from Bookmap. You buy from Bookmap. They are driven by the exact data as is the session prices, both generated and pushed from IRT. So I can either add more lines here, which I think might be way too busy for me, or eliminate the price lines and put in my IB zones and triggers. Just, I'm trying to do this the best way I can think of to accomplish my goal of having a consistently profitable trading business. And there you go. I'll tell you, Richard, if you just want a good laugh, listen to Patrick's or watch Patrick's thing on the line in Saudi Arabia. It's pretty funny. Especially the one where he goes through the statistics about and debunks the statistics about it, like this ridiculous, stupid Hyperloop of Elon Musk that's going to 100-kilometer long city. And you will never, because of the Hyperloop, you will be able to get from one end to the other in 5 minutes or something like that. And he does the math on how that would actually break down with stops along the way. You would have less than 1 second to get in and out of the thing and buckle up, and it would accelerate to like 5 Gs and back to zero again within 2 minutes, or it's just ridiculous. You know, I mean, it is so far past ridiculous, you can't even imagine it, but he just lines it out with simple math, and it's crazy. You know, Elon Musk is a screaming idiot, in my opinion. Well, he's not an idiot. He's a genius in that he got himself to a situation where there is a group of people that will believe anything he says. And that's, you know, good for him. I wish I could do that. I don't have those skills. That pay package that he's been awarded, if it goes through, he will get paid more money than Tesla has ever earned since its inception by 20%. And it's never made money. It's just amazing. Amazing. I mean, there are so many crazy things going on. I don't even know what to do about it. So I'm back to my charting here. Let's go back to something that matters. So here we are. By the way, these lines start plotting at 9:30. So if I see signals over here, I'm going, what the hell, over. And you see that we have not triggered any signals so far. Now, the first signal that needs to happen is the IB statistic, right? Because that's what activates the trades around the initial balance. So we can't have a trade until either the IB high or the IB low have been taken out. That will be signal number A. Which I think, well, here's one. There's an A. You know, and these signals, the way I've put them in there is just for my own visual reference, and they're not. I could do if A is not fired, then don't put a B and all that. I don't have time for that noise. I know what needs to happen, and that's so there you go. But the first one has to be an A, and then you need a B, and then you need the trigger, and that's it. My goal in the trading day to day is to eliminate. Yes, I have certainly seen The Wolf of Wall Street, and I go back to watching whatever it was called. Now my brain is going south on me. I guess it's called Wall Street, wasn't it? With Douglas and Charlie Sheen and those guys back in the theaters. Yeah, Wolf of Wall Street. Yeah, with DiCaprio. Very good. Or are you referring to Peter Boyle's Wolf of Wall Street commentary? I don't know which. Trading Places used to be a big one that a lot of people like to watch too. Back in the late 90s and early, dot bomb, everybody thought that was a funny, great trading movie to watch, and were quoting themselves and short orange juice and whatever else. So here we are. No trade signal at the moment, and therefore no trade to be trying to take. Yeah, it was just Wall Street, I'm pretty sure, with Michael Douglas and Charlie Sheen and whoever else. Probably a handful of good-looking gals, I suppose. That Wolf of Wall Street thing was really not about the equities or whatever. It's like it was like an over-the-counter kind of thing, I think, in like a strip mall somewhere, the real kind of deal, as I remember it, as I remember the truth about it. It was pretty much Hollywoodized. think that whole Wolf of Wall Street thing was around a boiler room. Which is kind of a version of the old bucket shops. If you ever read Jesse Livermore stuff or know anything about the evolution of the markets, the boiler shops or the bucket shops were, for some reason there's been scammers associated with markets since time began. I guess it's human nature, maybe. I don't know. That's actually one of the reasons why I've tried to stay focused on the futures. I think of all the markets that I'm aware of anyway, it's probably the most transparent and fair or equitable. Yeah, exactly. Exactly. Yeah, I forgot about McConaughey being in there. Yeah, Musk is just, all he sells is pixie dust, man. He hasn't done anything good and the sales of Tesla are horrible and have been down year over year. In the UK, they sold 7,000 cars in the first quarter or 1,000 cars in the first quarter, down 60 or 70%. And the same in Germany, and the same in EU, and the same in Australia was even worse, and on and on and on. And it's all based. His whole thing is based on pixie dust. That's one of Peter Boyle's got a great video on Musk and Tesla. Sales are down, pay is up. What kind of a company does that, quote unquote? Oh, and all of the insiders, like that gal that's the head of the board and Musk's brother, have sold $100 million worth of Tesla share stock in this past year. I mean, it's pretty crazy. Pretty crazy. Well, are we going to get our thingamajigger out here? I don't know. So what needs to happen over here in my new La La Land is that I be high, I be low. First rule, statistic to qualify is that we've got to take out the IB high or the IB low. And then comes B, rule B. If it is a IB failure, the idea is we pull back into the pullback zone. Price reapproaches the IB to within 1 point either way, and then it's a short and down. The idea is down we go. If it is the IB continuation trade, we take the IB, we trade up to the continuation zone, back to the within 1 point of the IB, and we go long. Those are, and then obviously you flip it on its head for the IB low side. That's the basic rules that are here. The way this does them in a backtest is it does them sequentially, absolutely. And the signals that I've got over here could start firing whenever, but I know that they need to be A, B, trigger. Okay. And I'm not going to worry about trying to code that because I don't need to. This is just a visual reference for me, and that's where it's at. Yeah, the Patrick Boyle piece on Tesla and Musk is current and very, very informative, eye-opening. And Musk didn't invent or create Tesla, don't forget. There's two other guys that came up with that car, the design and the idea. Musk bought it and then kicked them out and has done everything in his power to cover their names up. I forget what it is, what those names are, but yeah, he's a pretty strange guy. From A to Z. So now on Bookmap, what I would have, damn it, I don't want to do that. I keep doing the wrong thing over here. What I would have on Bookmap then would be those lines plotted. This would be the pullback zone lines in this area here somewhere. Bottom and up there, the IB. One point either side would be the trigger, and then the continuation zone would be up here. I may try to do that. Now, given the definition of the trades, the two setups, the IB failure and the IB continuation, one is supposed to expect, logically, that the IB failure trade would be in a session like we have now, which is, you couldn't get much more balance than this, could you? I mean, that's almost a perfect Gaussian distribution there. That would, logic would say, so we have been rotating outside in, outside in, outside in. We're going to continue to do that. Whereas the IB continuation trade would be generally expected in a more, well, here you go, more directional day. Look at that. Look at the difference. And remember the caveat about not trying to trade to the statistic. We're above the VWAPs. We're above the POCs. We're above the mid. Boy, we're going to take out the IB high for sure. A minute ago, you could have said that wherever we are. A minute ago, you could have said that over here, that we're going to go down to the IB low. Same exact thing. It's important to wait for the statistic to be hit, and then that's the first rule. And nothing going on in the news that I'm aware of. I don't know what the hell this means. Well, good for OpenAI or whatever it is, whoever they are. Just down to and just tapped on that MCVPOC, but didn't take it. Interesting, huh? Right here. Right here. I realize that this is boring as hell, TV or whatever, you know. But this is trading, really, as a business. I mean, there's a lot more fun stuff where they're not, they're just kind of gunslinging, and that's enjoyable, absolutely, to watch somebody else lose money or win it, either way. And then there are some places where the person doesn't trade live, but is continually talking about it being a vetted trade or something like, a confirmed trade. But pretty soon I start wondering, okay, may we see some data that supports that? That's always nagging in the back of my mind. And that's why I'm so fixated on not taking any trade off the stream and ensuring that there is absolute transparency and accountability. And, if I vet a trade, it's going to be absolutely right here, backtest in front of you, as I just did a minute ago, for all the world to see. Am I afraid about sharing my edge or my trading rules or whatever? I don't think so. I mean, think about the millions of people that trade. Do you think that I have thought of this 3 rules that are unique to the world? Do I think that the few people, 100 people or 50 people or whatever that are around this stream are going to affect the market and are about that edge? I don't think so. Therefore, I don't have a problem sharing it. I don't think that it's, first of all, most traders, frankly, don't have the discipline to follow the rules as they should, as the rules have been developed. I don't have a problem with discipline. That's, knock wood, fortunate, I guess. And it is, sure, it's boring for me too, you know. Imagine being on this side of the screen. So I sometimes I'll go have, go take a shower, go for a walk, get some sun. There's something, kind of a, in addition to this, it's real important to remember that the most critical tool you have for trading is on your side of the monitors. Your brain, your health, you are who interprets all of this stuff and who makes the decisions and who acts on all of this. You need to be healthy, well rested, not on emotional tilt of any sort, hydrated. Those things are all really important. They are more important than buying a 52-inch 90K something or another monitor, you know? I mean, really. Really, really important. Get away from the screens in the night, go out, and whenever your trading session's over with, get outside, get some UV, take off your sunglasses or whatever, and go for a walk in the soft light the afternoon or the morning. Focus way down the street or wherever you are. When we sit here on these screens for 10, like I'm on this stream 7 hours a day. When you're focused on the screen, your short focus eye muscles are continually activated. Like clench up your fists and keep them that way for 7 hours and see what your arms feel like. It's real important every hour or so to go outside, get some UV, walk around, look, focus down the street, do some push-ups, do some pull-ups, do whatever you need to do. That stuff is really important. People don't put any, they overlook the importance of you as a trader. You are the absolute key piece of your business. Really important. Another, following along with how that you are the key piece of your whole trading business and all of your setup is your equipment is your monkey mind. That's another big thing. We've been developing for thousands of years. Whether you're an evolutionist or a creationist, I don't think matters. I think they all agree that we've been around here a while. The fossil record proves it. And our mind has been, our wiring has been developed through evolution and passed on. And the things that used to keep us alive and served us so well to get us to where we are now don't work very well for trading. You're always going to have FOMO. You're always going to have revenge trading. You're always going to want to be right. What you have to do is recognize those thoughts and those feelings and not act on them. You're not going to ever eliminate them. It's been boiled in there, cooked in there for thousands of years. So that's really important. Your monkey mind, or as Tom refers to it as Hyde, Jekyll and Hyde, whatever. However you want to look at it. Boredom, trading out of boredom. A lot of people get their ass kicked doing that. Come on, really? If you approach it as a business and not a game or something, I think it helps. It does for me anyway. And also, frankly, I approach it as the fact that I'm an adult. So most of this, yipping and yapping and whining about self-control and, oh, I overtrade and, oh, I do this and, oh, I do that, and I can't help myself from blowing up accounts. Really? Do you go to the bathroom in your pants? To me, it's that basic. I don't, and I don't overtrade. Same idea. Of course, there's a lot of people that really promotes the importance of psychology and how little control traders have over it. And those are the people like Steenberger and guys who make their money writing books, I think. So don't get me started. Okay, well, we haven't done anything of importance here yet. We haven't gotten any signal. Now, we could get a B. We haven't. We could get one to do with price within this pullback zone, but it is meaningless until we have followed our sequence of A, B, and then trigger. And, that's the whole point of this thing. I'm going to go over it a lot because I don't want somebody to think this is some magic crap I dreamed up. It is just to visualize the rules. And it is magic crap, of course, but, Pixie dust. It's pixie dust or leprechaun juice or whatever. I don't know the statistics around these market or these government shutdowns other than the fact that there's over the last 8 or 10 of them, I guess it was. If I knew this, I shouldn't probably say the stat at all if I don't know what it is, but over the vast majority, I think the last 10 or 8, the equities market was up and to the right during the, through the shutdown. I don't know what, the probabilities of, and I'm not going to try to figure them out because I'm working on this statistics thing and getting my trades vetted and getting on with the mission here. There are platforms like Tasty Trade, which is based on data and probabilities, and I believe they have a facility of backtesting and doing all the statistic stuff you want to do. The problem that as I understand it, is it's all revolves around options. Well, I don't care much about options data. I suppose if I use the SPX as the underline for the ES, you could do some statistics that way, but I don't know. You're a boy, let's trade to that stat, huh? Let's throw one along. I only am have such conviction in that statement, that warning, because I have done it so many times before I realized, well, wait a minute, dummy. What are you doing that for? And we very likely will go up and take it out. Remember, we've got a 97.7% probability that we will exceed one or the other with price at some point now, since 9:30, between 9:30 and 1600. So yeah, it's probability. And if you're a gambler or you want to flip a coin and go, yeah, I think it's going there, knock yourself out. And also, this stream and what I'm doing here is not my way or the highway, right? This is what I am doing. If in fact flipping a coin works for you and you're statistically, you're consistently profitable, absolutely do not stop flipping that coin. It does not work for me. That means absolutely nothing for you. Some people have 1,000 indicators and flying around on their charts, or I can't even see price. And they do great and good for them. That works. On the other side of the coin, some people who trade, live and direct, who don't do anything. They use a 5-minute chart and a something else chart, and they don't have any volume, they don't have any price lines, they don't have anything. And they make money. Whatever works. Do not stop doing that. But don't think for a second that what somebody else does will be the panacea for you. What I'm doing here is I am putting forward a statistic, a verified statistical theory. And it's not just something I dreamed up. Trading from a point of view of statistics and probabilities is the key that the most successful traders and hedge funds in the world have realized is the way to go. Ed Thorpe, Jim Simons, Ray Dalio, Paul Tudor Jones, Tom the Trader, the guy that wrote The Best Loser Wins, Tom B. Broad, down at our level, everybody realizes that. And I'm just agreeing with that idea and trying to prove it out to myself. By the way, it is also, not to beat a dead horse here, but it's also the business model of a casino. And I don't guess anybody's going to argue with the fact that casinos are profitable. They play no game on the casino floor for which they have not pre-identified their edge and the specific rules. Then on the casino floor, their only mission in life is to play the game as many times as they can and rely on the law of large numbers to compound that edge to their bank account. Boop. And you see now that we have we fired 2 Bs here. That's because they closed within this pullback zone, but they are insignificant. They're meaningless because there's been no A. And I could probably code that out, but I'm not going to worry about it because I don't care. I know that. Now you know that, so we both know. Everybody knows that. So here we go. But it is kind of nice to see it works. One thing that now as I get to be more involved with this stuff, it's one thing that happened Friday. I have to review this to be sure, so maybe I shouldn't say anything. I have to be, sometimes, and I guess this is the fact that this goes hand in hand with the philosophy that if you have a vetted trade and it presents itself in the live market, you take it, and you know full well that the outcome of the next trade is 50-50. There will be winners, there will be losers. And you will rely on the law of large numbers and the probability to compound your account. I'm kind of spooked after that story on Friday when the copy thing didn't work properly. I'm not sure what to make of that, other than, oops, caution. And I'm not sure what to do about it either. Bookmap doesn't seem to care. I send them a thing and they don't, a ticket or whatever. What happened was, in case you don't know, come on, man, what's going on there? What happened was the following. Yeah, damn. Here was 5 contracts, 2 lot. So there's 10 here. And there's the account numbers. I hope somebody doesn't try to steal them from me. Eventually, I brought the stop to break even right here. But these two accounts didn't move to break even. And I'm sitting there thinking everything's closed at a scratch. And all of a sudden, price trades down to 87 and I get to 4 stops. Pretty disappointing, as you might imagine. And at that point, I didn't realize there was any way I could see that. That screen snap is of a way that I can see that. But wow, Oof. Pain in the ass. Pretty much a pain in the ass. Not pretty much, pretty exactly. A pain in the ass. Now, in a little minute here, if this price trades up to within this zone, but inside of these dots, or these, that will trigger, or that will then throw a trigger. Because it simply doesn't matter, though. These are B's, right? These are all B's. They don't mean anything until there's an A. We've got to take the IB high and then pull back to get a B and then get the trigger sequentially. Otherwise, it's no go Joe. 85 and 83. I guess I could draw vertical lines over here somehow or another. The last time I tried doing this, I went to move one and accidentally, because I've selected both, remember during the pre-market and setting up the trading system here. If I click anywhere in this active data column, you notice how the mouse turns to a dollar sign? Over here, it's the arrow. If I click anywhere in here in various combinations of clicks, I've got an order on, whether I want to or not. Even if I tried to just grab a line and move it or something else. Got to be real careful about that. Even if you're trying to move a stop, you've got to be sure you grab the label outside of this line. If you grab over here, you're going to put another order in there that you didn't mean to. My feeling is that it's more accurate and faster to trade here with Bookmap. For a long time, I didn't have the active data column activated to trade. I only traded with my mouse on the dome. And you can always use your hotkeys, but very, very, at least my experience with it, it's not at all accurate. Or, obviously, how do I put a limit order right here with a hotkey? I can't quickly. So, here we are. I don't know why I keep doing that. It keeps jumping around. And look at there, huh? Did we take out that IB high? Now, here's a perfect example of why you don't want to trade to the statistic. Okay, right there is 76. If you went long thinking you're going to get there, you've only got to get to right here and you're stopped out. Yeah, dropped back down again. It was up in the 90s there for a minute, and look what happened with our average true range. uh, are we going to get the IB high? Got plenty of stuff up here, don't we? Value area high, previous open, IB high. Here we go. Oh, here we go. Now we got a trigger, which is useless over here. Now we've got the IB, we got an A, assuming we close. That's one of the requirements. So that would be a requirement of the trade there. And notice that we haven't. Not the high, but the close. The rule is written as follows. The previous candle, the open is lower than the close, and the high is below the IB high, in this case. To have an A, we need to have the open below the IB high and the close above it. We do not have an A signal here. So I got nothing to do. And here we are over here. Now the difference here is that with Bookmap, and maybe we're going to get an A now with our signal over here. But with Bookmap, without having those specific signals coded in, for all intents and purposes, I would think that the stat has been hit. Don't know whether that matters or not. You know? Well, we definitely have an A now. So we have closed our A. That, in other words, we have met the criteria here and here and here. And now we need to have a B. Pull back to here. Back up for the short, or trade up to here. Pull back for the long. Simple. Maybe I'm just a simple person. I'm sure I am. I'm just an old cowboy from Montana, right? And that's the truth. That's not a joke. But the further I can get away from discretion, the better I'm going to like it. If I was good enough at this, I really envy the quant traders. Who are those folks proficient enough at coding? And this is certainly, I don't think you're going to do that with IRT, but proficient enough with coding that you put together a complete algorithm and step away. Now, they're never just, turn it on and go to the beach like you see on all the commercials, but there's always somebody monitoring it. Somebody, damn, I wish I could remember I think it was Goldman, or maybe it was Citadel, that had a machine get goofy. And they were losing like $20,000 a second for 10 minutes or some goddamn thing, crazy thing like that. You know, they have somebody sitting monitoring these things at all times. They don't just turn them on and everybody walk off and go, see you at the bar kind of thing. I don't believe, I've never worked there. I'm just saying what I believe and understand to be the case. But for sure, I admire and envy almost of guys that can the folks that can code that. And now if you want to take this one step further, if I code this trade system up and it's got a high statistic and a high probability with IRT, I can back test and then I can forward test. So assuming that both of those things are accomplished, it could be turned on as a regular trading bot. Boy, would that be a leap of faith. I don't know if I've got big enough kahunas for that one. But I definitely envy those who can trade, write successful algorithm programs. Now, what we need to watch over here, as I've said before, I have not bothered to code these signals up. These signals are simply a representative of an indicator or a marker of the signal that would be fired under a location, under a rule over here, having nothing to do with cadence or sequence, which is the rules do so. In other words, BB, 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 arrow, arrow, doesn't mean jack until we get an A. Now we got to get a B, and then we got to get an A, an arrow. Then we have something. Now, where we are so far, we need to get a close into the continuation zone. Then we need to have a pullback to here. Then that would be the trigger for a long, an IB continuation trade. By the rules that I have written over here. And these rules are a flip of the IB failure rules that we agreed to, that Rod suggested in Static. And I latched onto them as, wow, what a great idea to code that up so that there is a sequential pattern of rules. And all right, thank you. Boss is calling. I better bust a move. And so I did that with the IB failure, and then I thought, okay, well, I'll just change that around for the IB continuation. And this is just the starting place. Once the rules are working properly and everything is doing as expected as far as the backtest goes, then you can look at your statistics and decide whether you have a edge or not that's valuable to trade. And now I'm going to see what the boss is up to. And we're coming back down. We didn't get up to there again. There's two possibilities. One is that we trade into the continuation zone, pull back to the trigger zone. We pull back to the pullback zone, trade up to the trigger zone for the short. Those are the two opportunities. Those are the only two ways to go on this trade. And no IB continuation signal yet, eh? Nor do we have an IB failure. Where was it? And what has happened here? Now, if you are trading this off of your or some or another, discretionary signals, you could be making a case for the IB failure here. I am, however, am not. I'm going to stick with my signals just out of dogged stubbornness. $3.16, really? Okay. About time to go outside and have a look down the street and get a little of that fresh air and rest the eyes here, I think. So, yeah, well, let's take a run through the roses here. We got a, whatever that is, doji thing getting ready to go, or a shooting walrus, or a whatever kind of candle name that is. This is the micro composite, RTH session only. Wherever price overlaps, I draw a volume profile. These are daily candlesticks. Where price doesn't overlap from here to here, I change, and then here's the new one. These red and green lines here represent the high and low volume nodes of the volume profile for the most recent micro composite. Those red and green values, the values for those levels push to IRT, to Bookmap. The session prices, here was our responsive selling as we discussed in the pre-market on the open. And now we're going to get up here. We have just sort of taken out the IB high. Anybody that thought they were going to get a jump on the IB low and trade to the statistic rather than wait for it is pretty disappointed. Not me. Thank you very much. I learned that one the hard way. And what do we have in, I hesitate to do this, but the news. White House official on critical metals report. Okay. Okay. So the random risk boys are taking the stage. Not much left here and nothing on the docket over here. That's okie dokie. One thing I'd like to point out here is that if we look at the earnings for the week, or the report, nothing today in reports, right? Let's look for the week. Tomorrow. Notice there's no, understandably, there's no governmental numbers out or any kind of data because they're all shut down and they're busy blaming each other. What's new? Here's crude and the FOMC minutes. And then we have Chair Powell speaking Thursday at 7:30. I would suppose that that is a pre-planned speech to someone. I don't know who. But here's the one that I'm curious about. Obviously, last Friday was supposed to be non-farm payroll, but thanks to the juvenile delinquents in D.C., that didn't happen. So it was removed from the schedules, and I see it back on here for next Friday on investing.com only. They were the first to remove it last week ahead of the Friday shutdown, or, you know, Friday or Wednesday shutdown, or whenever they did that. And they've now put it back on. Financial Juice has not put it back on. We have Michigan numbers, that's for sure. That won't change. So that's interesting. And of course, Michigan and everything is typical. So I guess what they're doing is they're betting on to come that the government will be back in business by Friday, I guess. I don't know. That seems like I don't know what the probability of that would be. Huh. That's interesting. These are I have a couple, 3 of these keyboards right here. And I have one of the real old ones. And ironically, I had to repair one of those keyboards this weekend. I had to resolder the wiring. So let's see now. So much for those reports. Here we have basically a rotational day. Pretty much of a balanced profile, except there's a bit of a lack of excess at the top. Notice there's only one TPO up here. That would be a poor high, according to market profile folks. We do have some excess down below. And here we are with that same story over here. Now, what's happening with the new improved backtest beauty? Well, we did not. Here is the A rule. These signals will fire whenever that specific criteria is met, regardless of the sequence. So I must be vigilant in maintaining the sequence. A. There is no B since A. A B would have been a close within this continuation zone. Then a trigger would be pulled back to here. These would all be triggers where they're pulling back to within 1 point, but there's no B, so this is not a valid long. The short would be that we pull back and close down here in the pullback zone, and then pull up to within 1 point either side of the IB, and that would be a short trigger. But there's no B. Nothing to do here, nothing to see here, folks. Move along. And remember, these are just rules that I have come up with, coded up, and am in the process of vetting to see what their statistical edge, if any, is, or the expectancy. That's it, boys and girls. And that's it, man. That's where we are. And I'm not at all upset with the fact that I'm following the rules. So, you know what I forgot to do? I'm sorry. I haven't fired up the Mookie. Well, isn't that something? What a bad little pig I am. What a bad little pig. All right, there we go. This is music from Epidemic Sound, which I ended up having to buy or pay for a subscription thing in order to get around. YouTube is real fastidious about copyright, royalty, blah, 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 blah. And it's fine with me. I mean, if that's their ball and their bat, they can do what they want. And if I want to play with, play on the field with YouTube, then I need to follow the rules like anything else. I tried all kinds of ones, just FYI, that say, royalty free and you can do this and lo-fi that and something else. And I got strikes on all of them. The way you test them so that you don't get your ass in a crack with YouTube is you put up a stream, over the weekend or sometime when it's not public and when it's not a problem. And you use that music and then you close the stream, and after YouTube processes it, they have some algorithm or something that decides whether it's copyrighted or not, or strikes, whether there's a problem. And if they flag it, then you just pull it down, and that's the end of that. But I ended up having to land with this epidemic sound, so that's where the music I put comes from. I don't listen to it. It's completely quiet in here. I don't have speakers and stuff. If I want to hear that music or my voiceover, I need to put my headset on, which I don't like standing here 7 hours a day with a headset on. There you go. More information than you probably wanted, but hey, by golly. I'm pretty, I'm intrigued with the fact that this thing here's working okay. These are bars, by the way. I find them a lot easier to read than candlesticks. And they are exactly the same information. I could do that if somebody wants to see it better. I'm sorry, I didn't think about that. And I'm on mute. Sorry about that. These lines represent the continuation zone and the pullback zone at the high on the top end of my chart, just so that I can keep track of everything. Just out of curiosity, I don't think that it would be very beneficial to have these lines plotted, or maybe have them plotted but in a fine something. I don't know. I hate bookmap. Edit this. I don't know how to do that correctly, and I'm not going to mess with the middle of the live market. I am going to go outside, rest my eyes, take a walk down the street and back. We've got, this is a, should mind your risk, very definitely, in this situation.
kind of interesting that with all this price action, we've only had one A signal right there. And no B. Well, have yourselves a great 12-to-1 trade. I'm gonna go back down outside for a little bit of a R&R here. And may I suggest the same? Pretty interesting that we've only had one verified valid A signal in about an hour and a half. Well, so we still don't have a signal, unfortunately. We have a B, but then it never got pulled back for our trigger. So nothing missed here. And that's pretty much it. And this is exactly what can happen in a normal trading day. No signal, no trade. Kind of like no woman, no cry. Kind of like Bob Marley. Irritating, but welcome to the world. The volume hasn't come back much. And the average average rotations are down to fell off hard. I'm not saying I know what any of that means, but what it would seem to me is that we have just basically we're in a rotational trading day, you know. We're grinding them up. What do we do? Well, overnight was long inventory, and as I said in the pre-market, I just expected that we were going to have responsive selling on the open, and there we did. And they took back they cleared out or balanced out pretty much all that overnight inventory, because here's the close. Right? So we were up, and then back down to here. Here's the close, and here we are. And now we're trading up, trading it back up. Rotational. They adjusted the inventory, and the day traders got a hold of it, and up they go. There's been no real signal here. These lines that I've plotted on here now are representative of the pullback zones on over on that backtest chart, and they are. You can see that none of them have come to pass. And here's the IBI. And remember that this is as per my trading rules of now. You have to start somewhere, and then you backtest it, and that's what we have here. These are the backtest rules and the triggers or signals that follow along. These would be this is the backtest. These rules are embodied here. This is not running now. But what we'll do here in a little bit is do that. So there's a couple things that are pretty important to remember. Trading is a zero-sum game in futures. That means that's why they call them a futures contract and not stock or option or anything else. It's a contract between a buyer and a seller. Think about that for a minute. What does that mean? That means there can never be an imbalance of buyers or sellers. If you hear someone say, oh, the market went down because there were more sellers than buyers, absolutely wrong. That's impossibility. They don't understand how the futures market works. For the market to go down, aggressive sellers cross the market, the inside bid, and hit the bid, and down it goes. For the market to go up, aggressive buyers cross the inside market and lift the ask. That's how the market goes up or down. But there is never, ever more buyers than sellers or vice versa. So what does that mean? Well, if you think about that for a minute, think about what the market does. The market goes up to go down, goes down to go up. Why does that happen? The market goes up to go down, goes down to go up. Why does that happen? Well, it's pretty easy. Someone is on the other side of all these trades. When buy, someone is selling. How is that seller going to take profit? By bringing the market down, by coming across the inside market aggressively until down she goes. Now, maybe I'm, paranoid or whatever it is, but I believe that the majority of the time that the other side of the retail market is the higher time frame. And so the market goes, here goes retail. Oh boy, we're going to the moon. And then whammo, and they get all these selling days. These guys that took the other side of all of this, all these buyers, means somebody was holding short way up here. And in order for them to make money, they had to take the market down. That's how I believe. And I think justifiably so, the market moves because there are more buyers than more aggressive sellers or buyers, and there is always a counterparty. Someone is always on the other side of your trade. I think it's important to always remember that. It's not a situation with the stock market where you just, you buy a pool of stock, which brings the price up. That's not how it works with futures. And that's a real important and a really big consideration. So always be, whenever you're going along and you think the market's going to go to the moon, remember that somebody's on the other side of every one of those trades, and that somebody is going to take the market down to make money. And I'm not sure of the exact statistic, but the last time I heard about it, Goldman Sachs trading desk hadn't had a losing day in years. Now, I'd like for somebody to find the stat and show me that. I'd appreciate it, but that's something to remember. Citadel, BlackRock, all of those guys. That's why they pay for order flow to people like Reddit. All these poor Reddit people that think they're Robinhood people that think they're getting a free deal. Their order flow is being sold to the market makers. Why do they pay someone like Robinhood billions of dollars for order flow? Because they're going to take the other side of all those orders and they're going to make money off it. They're going to make more money than they're paying Robinhood for the order flow. That is the reality of it. Now, another thing that's pretty important to remember is that win rate by itself is just clickbait, and it's just complete BS by internet gurus and rearview mirror people. Win rate is important, absolutely. But by itself, it's just clickbait, and it is absolute BS. You can have a 90% win rate and go broke in 10 trades. It's the risk to reward ratio that matters. And if you want to be real precise about it, you can calculate your expectancy, which is over a large sample set of data, and you take the win rate minus the average winner. I'm sorry, the win rate times the average winner minus the loss rate times the average loser, and that is your expectancy. If it's a positive number over 100 trades or something that's statistically significant, now you're starting to get someplace. Until then, you're just pissing in the wind. So you need to really get your head around these numbers and what's going on here. I'm not at all concerned that I didn't take a trade today, other than as boring as tears, you know, because I didn't have a signal yet. And now that it's approaching 2 o'clock, the closer we get to, the end of the day, RTH 1 is the opportune time. RTH 2 is not so hot for me, and RTH 3 I'm pretty skeptical. But we have not had a signal here. In sequence, yes, we've had triggers. Yes, we've had one A, and we've had a series of Bs. There's our 1A. That is the one first signal, the A signal. Needed to be followed by a B. There's a B. We never got a trigger after the B. So there's never been a trade properly identified and trade. The trading software, the backtesting would not recognize that and wouldn't take the trade. And this is how I understand and believe that you approach trading as a business of statistics and probability, just as I am here. Pretty quick, we're going to be in the old world famous power hour here. So I guess we'll go over this back testing that I'm doing a little bit more here and determine if I'm, pissing in the wind or if if I'm doing this properly. So according to where we've been so far today, we haven't gotten a signal. We haven't gotten a signal for the two trades that I am currently vetting, which are the IB short, IB continuation, and the IB failure trade. Those two. Now here we have the signals in the backtest. Once again, I'll explain this. The backtest signals are all coded across here as custom indicators, or the rules, and then the signals are encoded with the arrows and the B's and the A's. Sorry, couldn't think of anything to do quickly. Now, the way the trade would work properly is we have an A signal, then we have a B signal, and then we have a trigger. Or we have an A signal and a B signal and a trigger. But we have not had those three in sequence yet today that I can see. And here's where I'm looking, and there is no trigger after our B's. So there has been no trade to take today in these IB, in either of the IB trades. Now, what's important about what I think what I'm doing here, and that you might want to try to do yourself, is you have to collect or capture a statistically significant data set of the trade or trades that you're vetting, that you're verifying, have an edge. And they have to be exactly the same parameters. You can't have a 3-point stop this time and a 5-point stop the next time and a 10-point target something else. They've all got to be the same parameters when you're vetting the trades, so that you can look back at your data set and say, okay, over 100 trades, I have achieved T1 60 times, 60% of the time, whatever you want to call it. Well, if it's 100 trades, 60 and 60% are the same. Of that 100 trades, I took a stop 30 times. Of that 100 trades, I achieved T2 X amount of times, and I scratched X amount of times, because those are the four options that I have. I have a stop, I have a scratch, I have a T1, and a T2. Now, for every scratch, there's one T1 and one stop. Scratches are kind of lumped together. So, in order to capture a statistically significant data set, if you're going to do it in real time, you're going to live, you're going to be Methuselah to get that done. You can go, one of the reasons I started building this thing before the signals here was that I could scroll backwards and visually pick out where these things happen and try to capture the data that way. Then finally, having the rules properly written out, or getting the rules properly written out to reflect this, I can backtest it. And that's the way to do it, away from the market when you're not trading. I'm doing that now to just for the sake of explanation, but I can set up the backtest. There's 500 days, 2 lots, RTH session only. I want these reports. It's the ES. Now, obviously, before anybody says anything, quite obviously the ES's V5 contract doesn't go back 500 days, but the ES continuous contract certainly does, and that's what happens in the backtesting. Okay, you ready? 500 days now. How long do you think it would take you to capture 500 days worth of data, even just scrolling back and keeping a real accurate record of each trade, each stop, each everything else? There you go. It took 5 seconds. There's a couple of anomalies that I need to figure out, which I mentioned earlier, and I'll definitely talk about here right now again. Average largest losing trade is $300. That's exactly right, because that's the stop. That's 12 ticks times 2 contracts, 24 ticks, and that's times $12.50 is $300. This is incorrect. This should be $750. And I can tell you what this number right here represents. This is from May 1st, 2024, and I have no idea yet what wrinkle is the problem with that day or that data. It is a proper entry. It is a proper T1, and then rather than take T2, which would be $750, it passed over T2 and ran to the end of the day, and it was a huge move down, obviously. So there you go. Another pretty handy thing you can do with this, and is how I know that about the May 1st, 2024. Once you scroll through how the rules have been applied, there is each and every trade, the entry time, the exit time, the entry time. Here's the entry time, here's T1, here's T2. Exactly the same. Exact. 23rd of November, 2009. Oh, here you go. Here's my birthday right here. 2009. At 9:51. And here's the result. So that's, and you see here was an end of day. So now I have to understand why that happened, and I can actually show you that. And I'm not crazy. Without looking at the side over here, there's May 1st, and there's the number. And I see no reason why this happened. There's it's not past the end of day markers. My end of session. There's 12:08. Takes T1 at 12:23, and wherever T2 should have been. Okay, let me start over. It's quite possible that we take have the entry and take T1, and subsequently close the trade off with an end of day, with the end of day rule. Because it could, from 12:23, 12:30 to 2:30, price could just fluff around in the middle there and not get a stop and not get the target. That's a possibility. I have to go back to the 1st of May, 2024 on the chart and see exactly what the price action did. It is possible that this happened, but it's not possible that it was for $3,187. It would have to be $650 or less, because it hadn't. This is inferring that it did not reach T2, or it would have executed. So therefore, it has to be less than $650, wherever one is. Right, and that's how it works. So that's how you can accurately backtest and get to the heart of whether your trade and your setup and your rules are working or not. Now, I can determine from, I shouldn't have closed it. I can see how many winners there was, how many losers there was, what was my expectancy. I'll do that again and show you, sorry. Football, I need to show you this one there. It's a 2.24% loss ratio, 1 to 2.24, 1 loss to 2.24, and it's a 36% profitable. This is a little bit misleading on IRT if you happen to be using it, because this is 36% of the time you had a winning trade, meaning T1 and T2. What you need to do is calculate the total winning and total losing trades, subtract them from 372, and then that gives you the scratches. So it's really a much higher percentage, a little bit over 55% actually, because I did that before. And I can't edit these things in the background, these reports and stuff, or I don't know how to. And also they only show in dollars, they don't show in ticks, which I would prefer ticks. But so there you go. That's the way to do a backtest. And if you can code, great. I tried to learn Python, and I got to where I had the risk neutral 2-lot scale and all that kind of stuff. I exported the data from IRT, so it was futures data. The problem is the backtesting software that I was using in Python, or that I was putting my code into Python, is called backtesting.py, and it doesn't deal with futures properly. Futures being points and ticks. It was built to do crypto or dollars or FX, which is in cents, incremental 1 2 3 4 5, not every point is 4 ticks. So that's why I went back to where I was, and I've gotten a lot more ground covered here with IRT. So hopefully that'll give you some idea about backtesting and why it's important and why I have confidence to trade these IRT or these IB trades. And yeah. All right, so we're in the world famous power hour. And now we can do I'll run through the recap at the bottom of the hour like usual. Seems hot in here. Got something wrong. Big. Well, and we had a VPOC migration finally here, huh? I didn't code that one in. Sorry about that. Flag it. And now this is a full session VPOC. You see how it's darker yellow than the brighter RTH. So this is not, however, where are we now? We've got 11,227 and we've got 11,232. We don't have far to go. Wait a minute, that didn't make any sense. There it is. I was going to say that didn't make any sense. Now we have the VPOC migration. That's all there is to it. It's the level at which the most contracts have traded, or the price at which the most contracts have traded so far in the day. That's it. Real simple. When this is 11 higher than that, then down here is going to go there. That's it. Now we have probably gotten a trigger right here. Let's check. Yeah, we got a trigger long right there. So we have an A, we have a B, and now we have a long. That is the long trigger. My problem is, look what time it is. And are we going to have the typical VPOC migration, which is where we trade down below it? So that's our first trigger of the day right there. 789, 90, there's 1 point. Got to get to here for our scale. And I'm not on it, obviously. I'm pretty hesitant about taking trades around 2:30 in the day. That's kind of past my witching hour there. Even if we've had a VPOC migration. And I'll repeat now, this is a trade signal for the IB continuation long. We had our A back over here, a series of B's along here in the IB continuation zone, and pulled back to the trigger. I haven't determined yet what I think about such a long, prolonged period of time. You know? And at this point in the day, well, let's see. It looks like it's getting ready to get up there to the scale or not. No, I'm not on it, unfortunately. I just happened to notice that. Will it go to target? Now we can confirm this. We can confirm the probability of this trade, or the possibility of this trade. We can send this to the chart. First, I don't know if this matters, but I don't want 500 days going on there. I'm going to send the signal to the chart. You ready? Well, if I'm not mistaken, now we should have an entry right over here. So I have to see what the hell is wrong here, or what I've done. I know. It doesn't do the current day. Here is our trade. I mean, this is an indication of the signals here. This is Friday. That's how it plots, right? So here's two 60 ticks winners and a scratch. Now, I'm going to take that back off of here because I don't want it bogging things down. And this is interesting because here we have a short signal, right? But we don't have the corresponding B signal, which is in the pullback zone. And here's our price action. If you want to assume that you got both signals for the continuation trade, this could be a re-entry point. In conjunction with this, here's where my discretion comes in. In conjunction with this IB or the VPOC migration, I would be worried about that trade. And you can see why. Okay, so this is kind of a bad spot to be, huh? the final curve and the made the final turn here. Should normally start the recap. I'm not crazy about taking trades at this late in the day. I don't think that's a statistic that I can't quote, but I don't have a good feeling that I think that the percentage of successful trades diminishes later in the day. All right, so let's look at the recap. Where the hell am I ever? There's our complete range. Initial responsive selling, and basically up for the next half a dozen hours there. I feel a little bit remiss in not taking this trade, but I just don't feel warm and fuzzy about it at this point in time. And so I'm not going to take it. Yeah, these are the lines which I have just experimentally put on here. Have nothing to do with anything. These represent the pullback zones in my back chart, just so I could keep my eyes on one thing at a time. You see where we basically didn't do anything for the longest time, POC wise, and now we just had this migration up. Remember again that the POC just marks the price at which the most contracts have traded so far in the session right there, and for the full session. We still don't really have any we did not get up to the previous RTH high, or which was the all-time high back on Friday, or euphoria. And IRT. Here's the full session of the micro composite. Market profile. This is the NQ, of course, and the ES. Average true range has fallen way back again, and we're down to 82% average volume compared to this time usually. Backtesting, which I've talked about quite a bit, right here. Those blue lines on the book map represent this continuation zone and the pullback zone. I just slapped them on there based on they're not automatic or anything else. I just threw them on there just to watch. Yeah, okay, so I've talked about backtesting quite a bit here lately, and I'm not going to go over it anymore. What's happening in this world? Oh, the news, the news world. News. Here we have the world famous well, we had Ms. Levitt speaking at noon. That's over with. Now we got basically nobody. We don't have any real scheduled news reports or anything, nothing government-wise tomorrow. This is Financial Juice, this is the free version of Financial Juice. Pretty soon at 14:50, we'll have the market on close imbalance over here. This is a much more interesting one for me. Usually it's my older one. This is investing.com. Now, Tuesday we start out with some numbers. And Wednesday, same story. Thursday, we've got initial jobless. Powell is speaking at 7:30 in the morning. And Friday, they've rescheduled the non-farm. Whether they know something that we don't know or not, who knows. And the Michigan numbers are, of course, real. This is non-farm payroll September. Private non-farm. Here's the regular one. I don't know. Last week they took the non-farm off the schedule ahead of Financial Juice, knowing or anticipating that the government shut down. Of course, they wouldn't put out the number, but whether they know something or not, I don't know. Anyway. This is also free, and it's called investing.com. The other one's financialjuice.com. This Financial Juice I'm not so crazy about, except I do like the squawk box feature over here a little bit more. So there you go. Now what's happening on this world? Well, if you took your signal and you got, say, at 89, 90, 91, you're not scaled yet. You're not going to be scaled until up around 93, depending on how quick you got into this thing. And as I said, I am not a big trader, or I don't think that I have a high win rate later in the day. I actually have an old journal which I manually put together that broke out the statistics by hour of the day and day of the week. Rod has come up with the RTH 1, 2, and 3, which I like a lot. Just basically take the entire training session, divide it into 3, and there you go. Now, 90, we get to 93, that would be the scale. I don't know. I don't see the opportunity for a squeeze. I don't see the opportunity for a, market on close or closing swing trade. So there you go. Now we did, that's not really out of balance. There is a trade called the 12-to-1 trade, or 12-to-1 statistic, which is much like the IB statistic, but it is based on the first criteria is the market needs to be out of balance. And then it says that if we made a new high or low between 12 and 1, which we did, then there's a high probability we will exceed that at some point in the balance of the RTH session, which we did here and we did here. So essentially it's been the 12, if you want to call this out of balance, and if you want to say the 12-to-1 stat was in play, it's been satisfied. Boop. That's the end of that. Okay, so continue with the recap a little bit here. We got 10 minutes till the MOC imbalance. This is my virtual journal, so by nature I'm talking to myself. That's how I get my thinking at the moment into this recording, is by this narration. So I'm essentially talking to myself. I can see everything, obviously, is recorded on my screens. The stream starts every trading day at 0800 in the morning, Central Standard Time. All times on my charts and that I refer to are Central Standard. And it lasts until 1500. That's 7 hours. Because I am fanatically committed to no trades taken off the stream and to ensure full transparency and accountability. And I don't trade in the rearview mirror, and I'm not an internet guru, and I'm not monetized by, you know, all of this. I pay for all of this out of my pocket, so as my journal, and I'm happy to share it because it also brings accountability to myself. So, you know, smack a like, thumbs up, subscribe. It would be great if you put a comment or something in the chat. But if not, that's, you know, for whatever reason, okay. So I'll say something about the a statistic which I learned last week. There's a high price in looking back over the last 8 or 9 government shutdowns, the longest of which was the last one, coincidentally, also on Trump's watch. The stock market has gone up and to the right each time, has gone higher during each market or each government shutdown. There's a tidbit for you. Sure what the hell to do with it, but there you go. If you figure out what to do with that, you let me know. Toot sweet, eh? So there we have it. That's about all I can say. As it's probably obvious, I'm pretty fixated on getting this frickin' backtesting over with and this IB trades vetted, which I will do. I'm going to put a parameter on this week, either using the backtest and or live trade. I need to get 2 more trades, and then this mess is out of the eval and into the XFAs. Friday, I did have that hiccup with the trade copier in Bookmap, and I'm going to I think I'll put together an email for their support, put in a ticket just to let them know what happened and if they have some suggestion. Obviously, they're not going to do anything. And what they're probably going to say is that the signal, the move was sent and it wasn't honored by Rhythmic, or, you know, it's always that he said, she said deal. So that's the problem when you got more than one outfit involved. What's hot in here? I ought to take this machine down, I think, and clean it out real good. I would normally do that on the weekend, but I was a lazy daisy this weekend, and I didn't. When I shut down, I may do that tonight. I feel a lot of heat in the room, which is abnormal. I know what to do. 46, we got 4 minutes. I'm not gonna fire up the crate thing and see what the temperatures are. Armory crate. Let's see what the temps are here. This will be fun. It isn't trading fun, but this is what goes on with. Hello. This isn't working very good, is it? Well, that's ridiculous. What the hell is going on? Something's up. Well, I'm gonna get rid of that right now, and then I will not. I'll get to the bottom of this for sure. Okay. Well, that's pretty weird. I never had that happen before. That's the tool for the Asus motherboard Creator. Hi, Panda. Whatever I have. And where you get all your temps and usages and RAM and, you know, CPU usage and RAM and all those things. That's pretty weird. I've never seen it just pop up like that and not do anything. Maybe I've just got way too much going on this GPU. This is a Intel i9 12900K CPU. I think it's 12 core, 24 thread or virtual cores or some damn thing. It's an Intel. I've been using Intel for a long time. This was the latest Intel chip I could get when I built this machine. I build my own trade machines, and it's got a RTX NVIDIA, a GeForce RTX NVIDIA 3060 GPU with 12 gigs of RAM. I think that's the weak spot, I believe. And I've got 64 gigs of DDR5 RAM in this on the motherboard. Panda, what's up, little people? Are you looking for Antonio? You didn't sing for him, and so he doesn't come here. I just realized it was dark. Don't have my overheads on. I've got a couple of those over screen lights. Boy, that makes one hell of a difference. I'll tell you that now. If you have that or have a need for that. I have two standing desks in an L, and in front of me is a 4 monitor rack, and then to the left is a couple more, and a couple 3 machines. One machine for trading, which is this one, and the 2 lower monitors, and one to the left where I have OBS and everything. So there you go. That puzzles the hell out of me that didn't do that. Here we go with the 50. And here comes the market on close imbalance. Bam, there it is. You see that? That's a little bit nicer. There used to be one hell of a reaction for market on close imbalance. Then there got to be so much craziness floating around that you wouldn't even notice it. That's only 4 ticks. Now, if you were long, if you took the signal and got long, at market on close imbalance, you got scratch, or you got your scale. That's not the way to trade. Talk about gambling. Hanging your hat on market on close imbalance. That's not I don't think that's a win in probability there. Texas National Guard is in transit to Illinois. Well, that's going to be a good one. Get a bunch of those Texas boys up there. That ought to go over pretty big. So here's our market on close imbalance. That's 4,007,000 sell side, 75 million sell side, 122 million sell side, and 219 million sell side. S&P, NASDAQ, Dow 30, and the Mag 7. This guy's, he's bound and determined to create a war somehow or another internally, I guess. Something. I don't know. I don't know what, I don't know. I really don't know. What in the hell is going on? So there we are. There's the market on close imbalance orders. Here is, we've been around the pot here far enough to see where we're going. there's more B's going on up here. I'm certainly not going to get involved in that, but had I taken this trigger, I would have been scaled and okay, but that's not something that I think you should count on doing in the last 10 minutes of the market, or I don't find that to be a safe and prudent application of risk. You know, that's not in my opinion, that's not a good place to put my capital at risk. Put it that way. Man, it could run right, you know, and they could go 50 points. Who the hell knows? I certainly don't. So we're going to shut them down here in about 7 minutes. Let's see what happens if we backtest this system against 1 day. No trades. I think that's wrong. I think I have to look into the code further. If I'm not mistaken, let me see. And I am often mistaken, don't get me wrong about that. So here's our A, clean. And that's, we have a open is lower than the IB high, and the close is higher than the IB high. And the bar before, the signal bar was open lower than the close, and the close is lower than the IB high. That is a good signal right there. That's an A. B. Okay, there's a B, there's a B. There's a bunch of them. There's more. And they're valid. Basically, closes, trades up to, from here, trades up and closes in this continuation zone. Then we pull back and get the trigger. So as far as I'm concerned, that is where we should have gone long. The system should have gone long. I'm not sure if it's looking, when I look back one day, if that's yesterday, if that's Friday, it would be Sunday. I think so. I got to see exactly how that works. I'm sorry to sound like a donut, but hey, I'm a donut. Like I said, I'm just an old cowboy from Montana here, so I can harness a team of horses. I bet you can't do that. Yeah, I don't know. And now we're not having any, wait. We would not have, I know what it could very well be. I need to see where I have my end of day parameter set. It will not take a trade past there. I need to be sure I've got that set correctly. I mean, not that it's not set correctly, but that could be the limiting factor. And let's, we got some time, right? Yeah, it's 4 minutes, 3 minutes. Would have been a long. Let's go with IB. Continuation long. This is these are the two position indicators. So here's position indicator from the session start, and here's a position indicator from the session close. So 90 minutes from the close would be 2:30. So I think, not wrong here. Right here, we should have gotten a signal because that's not 2:30. Here, after here, okay, that's past 2:30. Right? You can also see the time and whatnot over here, right? And the date, etc. So there's 29, so there's 2:30. So from that signal on, it should definitely not fire, but over here it should have. So I have to see why not. And we would have gotten a scale, just by the grace of grace, right here on this market on close imbalance and little folder all up here. But certainly not any kind of a trade or any kind of a thing worth putting your capital at risk for. I'm real curious to see why that didn't trade. I got to dig into the balance. As you can probably gather, I'm not exactly the world wizard about this thing. Here's what I was talking about. Sorry, I had the wrong screen. Market on close. This is one of the buy entries here. These are the position indicators, which is, so many minutes or bars or whatever from however you want to do it. Well, I've got this set up as position system start, my naming convention, and there's the system start and position indicator, and here's a position close, and that looks like this, minutes from the end of the session, okay? So that's how that one works, and it's 90 minutes. Greater than 90 minutes. This is wrong. Should be less than 90 minutes. No, more than 90 minutes, that's correct. Yeah, from the end of the session. Oh. So yeah, I don't know. We'll have to figure it out. What can I tell you? But I'm certainly not disappointed with the fact that I was disciplined to my rules and to this system that I'm backtesting and that I'm building out. So there we have it. And I will be back with bells on. Oh, it's already 1500. Well, there you go. I'll be back with bells on at 0800 in the morning. Please smack a thumbs up, subscribe, put the little bell thingy. It's every trading day at 8 o'clock in the morning for the pre-market and the introduction and the reports and how I set up everything. Analysis of the overnight trade and what I expect. This morning was pretty much spot on. Remember that the most important tool you have as a trader is sitting on your side of the monitor. You are the thing that does the trading, not the screens, not the software, not the internet connection. It's you. You have got to be healthy. Your eyes have got to be in good shape. Can't be on emotional tilt. You need to be hydrated. You know, all of that stuff is important. It's all useless. All the specialized equipment you buy is useless without you. So do something for yourself. Shut this mess down. Get outside and get some exercise. Go for a walk. Rest your eyes. You should go outside about every hour, or somehow where you can focus into the distance and let your eyes relax, because we stare at these screens, our short focus muscle in our eyes is clenched up the whole time. Also, the little bit of UV, the soft light for morning and afternoon, is really good for your eyes and the rods and cones, as opposed to this stuff we get from the screens. So have a good evening, and I will see you first thing tomorrow morning, 8 o'clock.